John Williams, the New York Fed president, a person we haven't heard from recently, saying he does not see any compelling reason to take a big step at the beginning. And that is telling reporters from a media briefing, essentially, that he favors 25 basis points as opposed to 50 basis points. Very clear. We haven't heard that from him in the past. He said we may need to make a decision later to speed up or slow down. The market and the Fed, however, he says, are in agreement on the ultimate path of Fed funds being upwards and toward a neutral rate of 2.5%. So, Scott, I know the market's really getting neck pain from the Ukraine story, the Fed story. Those are the two big stories animating the market right now. But in general, as we've been reporting, the Fed story here is more of a 25 at the beginning rather than a 50. That has certainly been the way the market has traded. And I have to apologize to my good friend Josh Brown for cutting him off a second time in 1/2 hour.
Second time. You know, and I do wonder, Steve, though, right, they're two separate stories inherently, obviously the Fed and then Russia, Ukraine. But I have to believe that there's crossover effect to some degree, the impact on energy prices, causing even more inflation from, energy price escalation. And then there's also the potential just more disruption to supply chain issues. A war anywhere in Europe is not good for an environment that is already suffering some issues.
I think you're asking the right questions, Scott. And, the extent to which the war concern, I believe the way I've watched the market trade, does trump the Fed concern here. That's for sure. But you have economic issues that could flow from what happens in Ukraine. You could have greater inflation for a lot of the reasons you just mentioned there. And you could have really ricochets back towards on this side of the Atlantic from what happens there. And you'll note, Scott, that the word geopolitical was in the Fed minutes from back in January 4 times in the last minutes. And that is increasingly part of the regular rhetoric that is being talked about by Fed officials as they're looking at this. And that's another reason, at least at the moment, to go slow.
Yeah. All right, Steve, we appreciate it.